Hi everyone, hope you're doing well. Today we have a sea of UK updates that we're going to talk about. It feels like in the last 24 hours we've been hit by loads of UK trading updates. So I'll try give like 3 or 4 minutes on each company and like my updated thoughts about what's going on. Most of them I own, but the last one I don't own, but it's like a sector that I'm watching at the moment, and it might be a new stock that I add in. Not anytime soon, but maybe 2026. I'm kind of, when I'm at this point already, I'm kind of thinking, new stocks for 2026. It's the same point that we were in last year where we're like the AMD situation, Audio Boom situation, Gaming Realm situation, where starting to look at stocks that could be really good performers for us going forward next year and trying to identify some opportunities. So we'll be talking about that a little bit in a few minutes. Just a quick shout out. I pointed out about the exclusive content on Patreon yesterday, which I did a video on Salesforce. Quite a few of you guys signed up to the Patreon, and obviously maybe the reason why is because of the Salesforce video. If you are signing up to the Patreon, just make sure that you do it through the web browser. Don't do it through your iPhone and the app, because Apple charge you an extra 30%. So make sure you save yourself some money and do it through like the browser rather than the app. Just thought I'd point that one out. What's also been interesting is Watch the Switzerland Group. Like, what a cracking day that Watch the Switzerland Group is having. 5.8% up, but I think it's having a bit of a bounce up because I don't know if you saw the LVMH numbers this morning, but they were strong, and maybe a bit of read through that the luxury sector is doing quite well. For me personally, my luxury sector play was Watch the Switzerland Group. But yeah, a pretty good day at the moment. But really, if you look at Watch the Switzerland Group, it was really strange because it's been on a massive downtrend since about June time. Since everyone kind of calmed down about the tariff situation, it had a big bounce, and then since then it just went on a massive downtrend, and we hit a low of around about £3.18, and since then we've actually had a pretty decent bounce up, nearly 24% up since that time frame. And we've watched the Switzerland Group. It's interesting because they actually brought a really strong update out on the 3rd of September. And it seems a common theme with the UK markets at the moment that there's been a lot of companies that bring out strong updates, and yet the market goes, yeah, it was good, but we're not going to buy it yet. And then the following days and weeks, it seems like the market realizes and then starts buying it up. The UK markets at the moment seem like quite slow to react to strong updates at the moment. So like watch the Switzerland Group on when it came out on the 3rd of September, which you can see is exactly where the bottom of the stock was. There was like a bit of initial bounce in the next couple of days, and then since then there's just been more and more buyers coming in, which is just so strange. It's just a trend that I've seen with the UK markets at the moment where there's been some okay updates, yet the market doesn't buy them up. Like I remember, I don't know if it was on YouTube or Patreon, I post quite a lot of videos on both of them, so I get mixed up where I say like this information. But on one of them I was saying like, that was a really good update. Like, watch the Switzerland, like, considering, like, the lows that it's got to in September and they posted this update, like, this stock should have jumped, like, 10-15%, and it didn't. But obviously now it has, which is strange. The exact same thing is going on, like, with B&M at the moment. Like, B&M posted an awful update, the other day. I covered it, and I was like, I'm getting out of this. Like, when your EBITDA is collapsing 30%, I was thinking, like, this is going to start pushing towards, like, 52-week lows, which is like the £2 range. And yeah, there was a bit of a drop on the day, but not probably as much as what it should be. And then you see since then, like the stock's been slowly bleeding more and more, and it kind of points out like the stock market being quite slow to sell things off once again. But yeah, just something that I've noticed there the last few days. What was interesting is I always like in my YouTube channel, because I don't know what it is about my YouTube channel, but I always attract a lot of criticism. And I saw this come up the other day, and it's great motivation for me. And he was like, must have been a screenshot I took a year ago, which is Game Realms is another gang waiting to happen. And I thought, oof, so sometimes some of these comments age really badly. Look at that since that time frame. I mean, that was a year ago today. So what, the 15th of October? Let's go to the 15th. I can't find the 15th. The closest I can get is the 18th. And since then, the stock is up 36%. And actually, at one point, and we were selling at these points as well, the stock was up 55% in a year. I love it. It gives me massive motivation there when people come out with comments like that. It's like, I'm going to make sure that stock performs amazing and we walk away with a profit. So congratulations to any of you guys that are Game Realm shareholders and made a bit of profit since that time frame. So what we're going to do is we're going to take a look at some of the trading updates from this last 24 hours. Before we do, I do have a message from today's sponsor. Today's video is sponsored by Snowball Analytics. Now, if you guys are like me, sometimes you'll have different investing accounts and it can be a nightmare trying to flick through all the different investing accounts. And sometimes you want to know what you're going to get paid in dividends in the future and when you're going to get paid those dividends. If you're on Trading 212 like me, that can be an absolute nightmare because there is no upcoming dividend tab, which can be a nightmare working out when some dividends are going to come into your account. Well, those issues are solved with Snowball Analytics. You can see from the dashboard here, it's able to bring in different portfolios into one page for you. It tells you how much you are up on the portfolio and how much your passive income yield is on your current portfolio. There's also other great features that tell you when future payments from dividends are going to come in, so you can plan your dividend income going forward. And as well as that, you're able to get that motivation and see your dividend growth through the years. So you're able to use a chart like this and see your dividend payments from 2023, 2024, 2025, and you see that scale coming up, which is a great motivation tool when you are receiving those dividends and they're increasing every year. But not just a great tracker of dividends as well, it also has a great comparison to the S&P 500 to see if you're beating the market. So you can see from this tab here, it'll be able to track your performance to see how you're doing to beat that S&P target, which is a great tool that a lot of investors want to know how they're doing to that benchmark, which is a great feature. If you do want to join Snowball Analytics, I'll leave a pinned comment in the comment section, and also there'll be a link in the description to join Snowball Analytics. You can start for free, and if you do sign up, there is a 14-day free trial to try out Snowball Analytics. And if you do want to get the starter pack, it is currently £6.70 a month, which is not too bad at all for this data that you're getting and the ability to track your dividends, your dividend growth, and also your portfolio performance. Thank you to Snowball Analytics for sponsoring today's video. And with all that done, let's take a look at some of these UK stock earnings. So first of all, Audioboom. Today, the stock is down slightly, which I would kind of expect because some of the information that is in there. But overall, it's been an absolute cracking year. You know, once again, Audioboom, you know, it's a stock that I pointed out about a year ago now. And in that time frame, the stock is up 153%, which is incredible. You know, it's very quickly, a lot of people are always quick to point out something that doesn't go right. But, you know, not as quick to point out when things go wrong, sorry. But when things go right, very... you know, there's not the same sort of level of responses when things go right, like Audioboom, and it's been a cracking performer. Remember a lot of people being negative on Audioboom, which was crazy to me because I was thinking like the setup here is really good, and obviously it's performed, you know, really well. I think this was my stock pick in Paul Scott's stock challenge for this year, so hopefully we're a bit near the top of the table in that one. Yeah, numbers were good, like. EBITDA was up 18%, growing faster than revenue, which was good. Revenue was up 9%, which is okay. That's good. Cash going up in the right direction. I remember a couple of people were saying like about Audioboom last year, like, oh, they're going to have to do a capital raise. I was like, what? Like, look at the cash at the moment. They've got no debt. They're going to totally swing to, you know, mega amounts of profit. And that's what happened. I was really surprised by that. One thing that I saw is the showcase, which is, you know, a key part of the company's growth for the next few years. Growing at what, about 18% or something like that. So a little bit slower than what I would have expected for, you know, one of the main drivers of the company. That was only one thing that I was like, slow down a little bit there. But they did say that they haven't received any approach for a takeover at the moment still, which is obviously one of the reasons why recently the stock went absolutely ballistic. I looked at the earnings and thought, you know, they were decent, they were good. The only issue that I would have with Audioboom is that obviously the company now, you know, when I was buying Audioboom, it was getting valued at like 14 forward times earnings. And right now it's now 37 times on 2025's numbers and 26 times on 26 numbers. So it's a significant increase from where I was buying a year ago. So I look at Audioboom and I think it's certainly fairly priced now. You know, when I was buying, it was significantly undervalued. Now, in my opinion, it is a fairly priced stock. The only issue that I do have is obviously if someone's going to buy it out, for the numbers they're doing, they will have to pay premium. They will have to pay probably about a 50% premium from where they are at the moment. So I'm stuck in a bit of a tricky place, because if there wasn't the potential of a takeover, I would probably be at a point where I'd be a bit tempted to start well, I already have reduced my position slightly, but probably reduce it more than what I am doing. But the other point is that, this looks like a great takeover target for someone. And if they are going to take it over, they're probably going to have to pay about a 50% premium from where it is right now. And they are looking for a sale. I thought an offer would be in by now, and it isn't. But I'm like, if the takeover doesn't happen, I can see easily the stock pulling back a little bit more than where it is at the moment. So it's a bit of a tricky place where Audio Boom is at. Now, the thing that makes me feel better is that I already did lock some profit in when the stock was pushing up to the £7 range. So that does make me feel a bit better. But yeah, it's definitely in an interesting place now. It's a nice place to be in. But yeah, having a think on where we're at with Audio Boom at the moment. So, but yeah, overall things are going really well. It's just about, is it a time to maybe take a bit more profit than what I have been doing, or do I wait for the takeover ultimately? So anyway, that's Audio Boom. Moving on to the next one, Hollywood Ball. So a lot of you guys actually requested for a bit of a talk about Hollywood Ball yesterday. Good jump. Stock is up 8%. Same again. What I was just talking about at the start of the video is where you have the stock that, like, the market goes, oh, that was a good update, and it goes up, and then the more it realizes how good it was, there's a slow buying going into Hollywood Ball. And I thought the update was really solid. Like, I would give Audio Boom a good 8 out of 10. With Hollywood Ball, I'd give these guys probably a solid 8, 9 out of 10, considering the valuation as well. UK revenue up 6%, Canada growth up 32%. As a whole, the revenue came in higher than the guidance, which was great. They said that EBITDA is expected to be in line with the full market expectations, which is great. And yeah, considering how far this stock has fallen really since its highs in 2024, we used to be 70, 80% up on Hollywood Ball, and then eventually we had a major pullback. So yeah, really surprising from that point of view how much it pulled back. And the market, in my opinion, seems to be pricing in a profit warning, and we didn't get a profit warning yesterday. In fact, we came in with record revenue and profit, and the revenue even exceeding guidance, which is even more impressive. So yeah, it seemed like we were pricing in worst case scenario. And the market at the moment, especially the UK market, seems to be, really short term. I thought the market would have I already even thought the stock would have maybe bounced even more than what it did yesterday, which is obviously impressive. The only thing I would say is that obviously this is the EBITDA. So when we do get the profit numbers in the full year numbers, there might be a couple of surprises in there that, the market goes, oh, we didn't realise you're having this one-time charge, and it gets upset about it. That could happen. But overall, it looks pretty good for what has been an awful time frame where it's been warm weather. And as we know, people tend to not go inside when it's been warm weather. So, yeah, really, really happy with that, to be fair. All I will say is that maybe the market isn't getting so excited at the moment because of the potential budget coming up. Obviously, it seems like, a company like Hollywood Ball might get hit quite hard again by the budget, as it did last year. Maybe a few people were worried about that. I still can't believe, like, the UK government is leaving a budget where there's so much concern about the tax hikes to so late in the year. It's just, an absolute rookie mistake to leave that uncertainty hanging. But it is what it is. So maybe that's what's kind of affecting it. But yeah, I was really happy with the update. I was expecting a profit warning, so this was more than acceptable from Hollywood Ball, and really happy shareholder. What I'm going to do is actually on the Patreon, I am going to go through these earnings in a bit more detail than what I am going to do today, just to let you guys know. So I will point that out a little bit more on the Patreon in a little bit. But yeah, really happy with that one. YouGov. So YouGov was an interesting one because yesterday the stock was down a significant amount. And I don't know why. It was actually a pretty good update. So unfortunately, I've been in YouGov for a while, and I started buying the shares on it peaked in 2021, and it was on a pretty decent decline. I thought, has this sold off a bit too much? And then I got hit by this profit warning, which was absolutely devastating. So yeah, obviously going through a bit of a tough time at the moment, but I still think there's a bit of a solid business under there. That's why I've continued to hold my shares. And I thought, what, if they do turn it around, maybe I become a bit of a buyer here. But I'm waiting for signs of like a positive update to come a buyer. But yesterday, I thought I did start to see the signs of like a positive update coming in. Operating profit was up 16%, or underlying change was 1% without the acquisition. The revenue, sorry. Operating profit was up 22%. Underlying change was 26%. So those were good numbers going in the right direction. Like, obviously, organic revenue, you'd probably want a little bit stronger than that. But it wasn't terrible. Like, it's not declining 5% a year or anything like that. Looking further down, I was trying to pinpoint a few things that maybe the market didn't like. But same again, trading was in line with management's expectations. They did say that they're increasing spending on parts of the business. But it said here, underneath it, that the group expects to deliver modest progress at both revenue and adjusted operating profit. So I was listening to Paul Scholes, Paul Scott yesterday, and he was saying like, oh, that's you don't want to be doing that. But I thought, well, that's what the market didn't like. But I thought, well, no, because the market is saying that they're going to deliver to the market, they're going to deliver modest growth. So it's not like they're going to be decreasing the profit, because if they come out here and they said modest progress in operating profit level, so that kind of balances that out. And I was looking at the guidance and I was thinking, if they get anywhere close to the guidance that they're expecting to do, the revenue, nice, that's definitely a modest increase. Net profit looks certainly a little bit more than a modest increase there, so maybe there's going to be a bit of a downgrade on that 2026 number. But even at the moment, 8 times earnings, next year 7 times forward earnings, decent growth, decent profit margins. Yeah, the balance sheet's not great, to be fair. And these are a little bit of an issue where they do these sneaky EPS downgrades through the year, which definitely isn't nice. And that's something that I'm watching at the moment to make sure that trend is broken slightly. But I looked at those results yesterday and I thought, you've got a company that's had a tough time here at the moment, but you've got this old CEO that's come in. He's stabilised the company. He's doing cost cutting. It's showing up in the financials. Yeah, revenue growth needs to be better, but it's not declining. And you're at 8 times forward earnings, 3.5% divi yield. That was a big step in the right direction. And I was really surprised the market yesterday sold it off even more than what it had done. And even today continues to sell off 4%. So I'm looking at that one thinking right now, is that an opportunity maybe where we need to start thinking about maybe averaging in there? So yeah, I'm going to go through that one in a little bit more detail on the Patreon with you guys, and I'll run a few numbers with you guys. But yeah, interesting. Last one that I don't own, Robert Walters. So this was totally the opposite to all of these ones here, where the stock actually went up. The stock went up yesterday, and I looked at their numbers and I thought they were atrocious. This is where we talk about the group's revenue was down 12%. Which is terrible. Look at the net fee income coming down massively. And they come out, I don't know if this is the one line that saved them, but they said, our year-on-year fee income performance during the third quarter improved slightly compared to the second. And if that's what the market's getting excited about, that is concerning, because apart from, when you look at the numbers here, the declines are going on. I know like the market's trying to jump in and go, oh, is this where it turns around? But it needs to turn around more than this, and I couldn't believe that this one was up yesterday. Although, like I said, this is a space that I'm watching because some of these stocks have been absolutely crushed. I mean, look at the dip on Robert Walters, down around about 82% here. And it does tend to go through cycles. Like you can see here, the recruitment space that Robert Walters are in, they do go through big boom and bust times. And right now, it's certainly going through a bust time. Look at that. And if they are, I don't know if they are going to get disrupted by someone like an AI, for example, but I don't know if they are. But if they, when you look at like someone like a Robert Walters at the moment, the market cap is currently like 94 million. And if they get anywhere close, let's say like forget COVID, go to 2019, right? And they do a net profit of 34 million. Well, 34 million on a 94 million market cap, you're around about 3 times earnings. Maybe even slightly less than that. And then you're thinking, well, if the company goes back to like, let's say 10 times earnings, yeah, you're talking nearly a triple up on the share price there if they do go into a better cycle, which, yeah, I'm looking at Robert Walters here and thinking, or the whole recruitment space, whether that be someone like an S3, and thinking there's got to be an opportunity here at some point. Surely recruitment's going to come back. Like I said, I don't think it's now, but it's certainly one area that's on my 2026 watch list at some point. And yeah, but I was surprised to see the market buying it up. I thought it was going to start pushing it even lower on that update because there's certainly no signs of recovery there at the moment. But I'm watching it. It's a space that I'm watching from the sidelines at the moment. The other thing about Robert Walters that makes me bit nervous compared to someone like an S3s that are now unprofitable, I guess. But we'll keep watching anyway. So yeah, there's plenty of UK stock talk there for you guys. Hope it's useful. Like I said, I'm going to go into a bit more detail. If you're a bit more of a serious investor, a bit more of a nerdy investor, like the more details, like a little bit more of the number side, we'll do that on the Patreon for you guys. I'll probably do the Holly Ball and YouGov earnings in a little bit more detail on there anyway. So yeah, thanks for watching, guys, and I'll see you in a bit.